Listen, folks, we don't mess around. Now we're talking about J.P. Morgan Chase. I talk about all these earnings, baby. Look, I'm here for you. Let's get cracking with these. J.P. Morgan right now down 0.5% pre-market. Nothing too crazy, all things considered. We'll take a look at what the earnings report says, but you need to take into consideration the past performance of the stock. The last 5 years have been incredible for this stock, up 144%. That includes the dip of last year. In just the last year alone, it's been up 64%, one of the best performing financials out there. So there are a lot of expectations really coming forward for what this needs to be able to do. So let's take a peek on these earnings. So quarter three. GAAP EPS of $3.74, beats by 74 cents. Nice. That's a very nice beat for them in terms of profitability. You like to see it. It's a great beat. Revenue came in at 29.6, up 1.7% year over year. It's in line, which is wild. You never see an in line. You never do on revenue. It's always a beat or a miss. It always is. It's wild to see. But good things. I mean, that's great. I mean, hitting estimates, fantastic. Growing revenue year over year, fantastic as well. And managed revenue came in at $30.4 billion. Credit cost net benefit of $1.5 billion. The consensus was $17.9 million supposedly, which included a $2.1 billion of net reserve release and a $524 million net charge off. So consider that when you look into that. So obviously there's your difference there. Total market revenue came in at $6.3 billion, down 5%, with fixed income markets down 20% and equity markets up 30%. So give or take, I mean it's a plus or minus. Fixed income sucked for them, as we could tell, and equities did very well, 30% up. Average loans were down 7% year over year and 1% quarter over quarter, and average deposits though were up 21%. So positives, negatives. Again, on these loans, it's curious to see what that looks like. I do think they're tough. It's really tough year over year because obviously I'm kind of surprised with record low interest rates. You expect more people to still be buying homes. Now the housing market's ridiculously hot. Let's keep that in consideration. But even stuff like vehicles, with low interest rates, people should be feasting up. They reported $9 million net interest income of $38.7 billion. The company's announced a guidance of $52.5 billion for the full year for net interest income. Nice stuff. I mean, that's a lot of money. That's a lot of money. What can I say? We're gonna take a look at the presentation solely because the press release for them it's cluttered. Okay, it's hard to parse for the YouTube audience. We'll go back to it though and look for the balance sheet and stuff. But let's take a look at this. Okay. As far as income statement, look at that. Third quarter net income came in at $11.7 billion. Very nice to see on that aspect. I love seeing it. What can I say? We saw the managed revenue line. Expenses were $17.1 billion. Not too bad. Loans average loans of $1 trillion, up 5% year over year and up 2% quarter over quarter. Deposits, average deposits were $2.4 trillion, up 19% year over year and 2% quarter over quarter. Nice stuff to see there. As far as distributions, dividends, $3 billion in dividends paid, and $5 billion of common stock net purchases. So that's fun stuff. Fun stuff for the quarter, all things considered. And what do you see here? I mean, obviously, it's great stuff. I mean, it's great stuff in terms of this managed revenue. Year over year, you see differences. Slight, very slight. Expenses up slightly. Net income, though, saw a much bigger increase year over year. Not quite where it was quarter over quarter. Not too crazy though, but $2.2 billion growth is nice to see year over year. I like seeing that. I really do. Return on investment looking good. I mean, 18%, solid stuff. Very nice stuff. Allowances for credit losses. You get obviously from credit cards, from the Chase side of it, and home lending. Nothing crazy, all things considered. There's nothing that's sticking out as crazy to me. I mean, firm-wide, it's not too bad at all. Yeah, not too bad. Not too bad at all. A little bit lesser, actually, than what we've been seeing, so not too bad at all. Fortress balance sheet. We'll get into the balance sheet in a second, folks. Don't you tell me. It gets a little cluttered here. It goes into the specific segments. Corporate investment banking had a net income of 5.6. Nice stuff. Investment banking revenue of $3 billion, up 45% year over year. Definitely a pretty significant one that you need to consider there. Commercial banking up 30% year over year in terms of net income, and revenue up 10%. Nice to see on that aspect as well. Asset and wealth management up 36% year over year in terms of net income. Revenue up 21% year over year. Nice stuff. I mean, nice stuff. It's nice. And then outlook, they're expecting net interest income obviously at $52.5 billion as we saw, market dependent. So obviously if market goes to crap, might not see that. Adjusted expenses of $71 billion approximately. Again, depends on the market. We'll see what happens. We'll see what happens there. So let's get into the press release now, and really just dig for that balance sheet, which is what I want to see. You want it. It is the same deal, but it's a little bit less enjoyable to look at necessarily than what we were looking at prior. Okay, the presentation just a little bit cleaner. Excuse me. Do I have to look at the? Have they duped me? They haven't duped me. We've got to go into the supplementals. Look at that. They have fooled me. They thought I was a joke. Consolidated balance sheets. It's page 5, folks. If you've never read the table of contents in your life, I'm teaching you here. We teach you everything in this house. Everything! To page 5. Okay, now don't forget page number in the bottom right, kids. 3, 4, 5. We did it. It's also in 0.3 point font, so consider that. We'll zoom in. That's a good zoom, I think. I think that's a sufficient zoom right there. Can you see everything? I can. They even tell you the change. I love this. That's the good thing about these financials. On the right, they tell you the change in terms of that, so we can see on that aspect. It's beautiful. Okay, let's get into this thing. I'm going to compare personally year over year, far left column to far right. We're talking about Bernie Sanders here against a Alex Jones. I don't know. I don't know what I'm saying here. My brain froze. It froze, dude. Total assets currently sitting at $3.7 billion compared to $3.2 of the year prior. That's right. Quarter over quarter up 2%, up 16% year over year. Good to see in that aspect. Cash is a little bit up year over year, 24% up, just a little bit, but so again, that's nice to see. Total liabilities also saw a rise too. You see $3.4 billion here compared to $2.9, so 17% increase year over year. Right around $5 billion. Heard some craziness outside. Don't know what that was. It scared me. And assets rose by, or liabilities rose by right around $5 billion as well. So nothing crazy there. Stockholder equity, as you see, rose just the tiniest bit, 290 to 270, 7% growth. We like it though. We'll take any rise we can get. Now you look at this stock, and let's take this into consideration. This is a company trading at a market cap of $494 billion. We're talking about a price to sales on this one it's pricey. We're talking our price to sales over 2. I mean, what can I say? This thing's trading expensive. We're nearly close to 3 on the price to sales on this company. I think it's trading a little too pricey for me right now because of this run-up. I like it more really in the closer to 130 range, which I know is ridiculous to expect, but I don't think it should have necessarily bounced back this hot, as hot as it did. Still sports a nice dividend yield on it, and the PE ratio is actually pretty cheap. I just think market cap wise is trading a little too expensive for my tastes. But that's what I got for you. Let me know if you think this is a buy or sell or hold. Hold maybe. Hope you have a good day.